Good morning. Today I have three stocks. One is a PSU Container Corporation India, which has a bonus issue. Then the second company is Paras Defense and Space Technologies, which is a stock split. And the third one is Nestle India, which is also a bonus share in the range of 1 to 1. So, bonus issue of Container Corporation of India, 27% return in the last 1 year. Uh, Good domestic volume growth of 20% and 10% growth in terms of import export volumes. The bonus issue date is the 4th of July 2025. The company will issue one bonus share for every four shares held. Paid up equity share would be 5 rupees each for every four existing shares of 5 rupees each. The allotted shares would be available for trading from the 8th of July. Let us quickly check some information of Container Corporation of India. Okay, there you go. That is the logo. Current price 3% up in the last 5 days, 3% down in the last 6 months, and minus 28% in the last 1 year. So, again, October November price correction in the stock and in the stock market has led to a 28% negative return. Concor is engaged in the business of providing inland transportation of containers by rail, covers management of ports, air cargo, complex established cold chains, 46,000 market cap, high of 1076, current price 756, price to earnings ratio of 35, book value 203, almost 3.75 times its book value, return on equity 10%, face value 5 rupees, return on capital is 13%, dividend yield is 1.22%. Companies delivered poor sales growth of 6% in the last 5 years, low return on equity of 10% in the last 3 years. You can see sales have been stagnant. Net profit has reduced in the last quarter, which is a bit of a concern. And again, you can see marginal growth of revenue and marginal growth of net profit over the last 1 year. We'll look at the second company now, which is going to do a stock split. It's a defense stock. It is Paras Defense and Space Technologies, 40 years of experience, small cap company, engaged in designing, developing, and manufacturing defense electronics, space optics, EMP protection, and heavy engineering solutions for military and space applications. Is in focus. Announced a 1 to 2 stock split, with each rupees 10 share will be split into two shares of 5 each. Record date is 4th of July. Has entered into a joint venture with Haven Drones Israel to bring hydrogen powered mission specific drones to the Indian market. This JV aims to design, manufacture, and supply advanced drone systems for defense and homeland security, with plans to expand globally. We'll have a quick look here. So, this is the logo, current price, 1 month return 1%, 63% return in the last 6 months, which is an amazing return compared to the uh, war that is happening uh, around the world. A good opportunity for the company to demonstrate good export opportunities. Then private sector company engaged in designing. So we've been through all this. Company has catered to four major segments: defense and optics, defense electronics, heavy engineering, electromagnetic pulse protection solutions. 6,500 crore cap, book value 159, price is trending at 10 times, 10.5 times its book value. Dividend, no dividend paid. Return on equity is 11%. Return on capital employed is 15%. Face value is 10. It will be converted into a face value of 5. 25% CAGR growth of profit in the last 5 years. No dividend payout. Promoter holding has decreased by 3.3% in the last quarter. Low return on equity of 10% in the last 3 years. High debtor days of 295 days, which means the company is not getting paid on time. Uh, then can see last quarter sales have grown by 25%, which is a good sign. Net profit has grown by 50% just on the last quarter, which again is a very good sign. Then we'll go look at the third company with a bonus issue, which is Nestle India Limited. Nestle has approved a one-to-one bonus issue ranging record date hasn't been confirmed yet. One share to one fully paid share of 1 rupee each. Company boasts vast network that includes 10,000 distributors, 5.3 million retail outlets, 280,000 farmers operating 9 factories across India, reflecting deep-rooted market integration, wide consumer reach, and significant socio-economic contribution nationwide. Nestle's powerful brand footprint in India includes 5 billion Maggi servings, 12.1 billion Nescafe cups, 3,950 million Kit Kat fingers annually, with 2,100 million chocolate units, 34 million milk tins, and 961 Nestle kiosks. Its reach is immense. Impressively, Nestle products are present in 2 out of 3 Indian households, showing deep customer engagement. So we'll go through the disclaimer before we go through the financial details. Article information extracted from the various different resources on the internet. Investment opinions and recommendations are solely of brokers, experts, and broking rating agencies. These do not reflect any personal opinion. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. Author bears no responsibility for any losses caused based on these articles. It is strongly recommended to consult a financial advisor before making any investment decisions. Then this is the logo of the company. These are the products: Maggie, Kit Kat, noodles, then coffee, then the Nestle brand, and 1.6 return, 1.6% return in the last 1 month, 14% return in the last 6 months, and negative of 3.6% in the last 1 year. Company is a subsidiary of Nestle, which is a Swiss MNC. Company operates in the food segment, 2,37,000 crore cap, highest of 2,778, current price of 2,460, price to earnings of 76, which is pretty high. Uh, Book value 42, which means the company is trading at uh, almost 50 times the book value. Dividend is 1.1%. Return on equity 83%. Sorry, return on capital employed is 95%. Face value is 1 rupee. Return on equity is 3 years 107%. Company has been maintaining a healthy dividend payout of 82%. Stock is trading at 57.6 times its book value. Company has a poor sales growth of 10.3% over the last 5 years. Sales erratic. Uh, Net profit has gone down in the last 2 quarters. Revenue has been the highest in the year so far. However, overall net profitability is less. You can see minus 21% growth and minus 17% sales growth in the last 1 year, minus 4% stock price correction, and 83% ROE in the last 1 year, which is less than the 108 over the last 5 years. Then equity capital has increased, reserves have increased, borrowings have drastically increased, impacting the overall financials and the performance of the stock. Higher interest costs would lead to higher interest payments and impacting the overall profitability of the company. Promoters 62%, FI is 10%, DI is 11%, public holding 16%, slightly on the higher side, leading to chance of high price volatility and high exchange of shares traded on exchanges here. So friends, thank you for watching. This video covered 3 sectors, 3 stocks, and important information with regards to bonus issue and stock split, which signifies that the company is performing well, may not be performing as well as they've done in the past 1 or 2 years. However, still continues to grow good amount of return in terms of revenue growth and chances of high profitability growth as well in the future. So thanks for watching. We'll connect with another video soon. Wish you a happy weekend. Please share this video with your friends, family, and associates so they could benefit from this information as well. Thank you.